Thanks for joining us today here on America's Retirement Headquarters, home of the Retirement Guys Formula and America's Medicare Associates with Nolan Baker, Scott Kirshner, myself. My name is Chris Swan. Here's how you reach out, 419-794-3030. Once again, that phone number, 419-794-3030. Always online, americasretirementheadquarters.com. On today's show, we're going to relate your brain to your retirement plan, and we're betting that an 8-year-old can define the stock market quicker than you. All this and more, but first, let me check in with the guys, Nolan, Scott, and Chaz Price. Back once again. Gentlemen, glad to be with you as always. How are you today?
Well, we're doing very, very well, Chaz. Glad to have you back on again. And
Pleasure.
Yeah. I had the pleasure of doing the Who Day dance, the Cincinnati Bengals. I went to the game last Sunday night. Wasn't a fun ride home. Got home, I think, about 4 a.m. But I tell you what, they won in stellar fashion, so it was a lot of fun. Never been to a sporting event with so many people in my life. It was absolutely crazy. So we'll hopefully tomorrow they're able to win another game against the Bills.
Looked like a lot of fun.
Yeah.
Well, now you're the good luck charm. You just have to go to all of them. I think that's just how it has to be. So go and start making your plans for that. Whether it is your goal in life to attend a big game, to go to that, or play golf in all 50 states, whatever your retirement dreams are, having a proper plan is really how you go about making it into a retirement reality. And the team at America's Retirement Headquarters, they can help you with just that. So again, the number when you're ready to get started, 419-794-3030. Now, the outgoing president of the Kansas City Federal Reserve believes another economic shock could push the country into recession. Yet Esther George tells CNBC she's in favor of keeping interest rates higher into 2024 to get inflation under control.
I think the economy is vulnerable when you begin to be in a rising rate environment. And we see a global outlook that poses certain risk to the U.S. as we look at that. I understand in a rising rate environment why people are very attuned to this issue of demand coming down. But we continue to see a very tight labor market. We continue to see persistence around inflation that I think is going to require our attention for a while.
Now, outlooks like these and, all the talk can certainly rattle retirement savers. What are you guys telling concerned clients that are giving you guys a call right now?
Well, this is Nolan, and what I would say is, first I would start with perception. If you work in the word perception, is kind of like, what is your perception right now? Because in reality, I think people that are rattled with the economy and the markets, it does come down to their perception a little bit. For example, I just finished up a meeting before we jumped on the radio, and I was talking with a client who had a very low interest rate account. It was paying him 1.5%. And if you go back 2 years ago, that rate was actually pretty decent compared to where we were a couple of years ago. But when I ran the new rates that are out there today, there are rates available that can almost double, triple, and get significantly higher rates on what he had. So if you came in and your perception was, I'm just getting paid a very low interest rate, the reality is there's better opportunities that are out there. So when we look at the volatility creates opportunity. I think there are some good opportunities to take a look at in the marketplace that's out there. Chaz, I don't know, what would you say?
Yeah, I would agree. I love the sentiment that you share sometimes, is that whenever something bad is going wrong, there's usually opportunity elsewhere. And we've been talking about interest rates, rising interest rates, and inflation for a long time. In fact, almost every single conversation starts with that, because I think it's important for investors to understand really what's going on and why the stock market is down because of rising interest rates. And so I kind of just usually describe it to them as, you have alternatives in anything that we do, whether it be investments or which cars you're going to choose or which college you're going to go to. You have alternatives. And the entire market is kind of looking at those risk-free rates, those money markets, those savings and CD rates that a year and a half ago were effectively zero. I mean, I think the Fed funds rate 2 years ago was 0.0 something. But now it's up to almost 4.5. And so that rate generally translates into every other interest rate that's in the economy, CD, savings, mortgage rates. And so from the perspective of a stock investor or an investor, when you're looking at having a risk-free alternative that prior to the inflation that we saw in the last few years was effectively zero, it pretty much forced your hand into making a little bit more aggressive investments and buying stocks, because that's where we could get some yield in the form of dividends and earnings from some of these companies. Conversely now, fast forward a year and a half, and now your alternative's better. You have the ability to earn a 4.5% interest rate in some cases on money markets that have effectively very little risk, if at all any. And the rational investor is saying, I don't know if I need to take the risk on the stock market. I may buy this money market or this fixed interest rate. And so if the entire country in the world is having that conversation internally, we see why the stock market is going down. The saving grace to me is that we know it is a hopefully a somewhat transient event where we don't expect interest rates to rise into perpetuity. I mean, I think most advisors and most folks we've talked to say 5%, maybe 5.5% is somewhere that terminal rate that we're looking for. So if we know that stocks have fallen because of a rising interest rate, then therefore we could assume that if interest rates stop and maybe at some point start going back down, we may have a rise in the stock market conversely.
Now's a great time for your HSA clients. Anybody that's got the house savings accounts, you can put money in there because it's typically a money market account, so you're going to earn some money on that tax-free dollars you're putting into that HSA. I stay in my lane, so I'm going to throw a question to you guys. Isn't this kind of a recipe for a great return for people? You can sit in some money market accounts and earn more, because if you look back in the past, even like the COVID 2020 year when the market was way down, the interest rates were real down, and you had your money market accounts were earning nothing. Now the market's kind of all over the place. You can put money into money market, and when it comes back, you move from the money market and get those increases as well. I mean, to me, that sounds like a great opportunity.
Good buying time.
Yeah, good buying time.
Yeah, and I would sum it up, if looking at investing in high inflation, is a concern for you, I'd sum up this topic with 4 key takeaways and then 1 action item. So number 1, if we look at things historically speaking, a lot of the traditional fixed accounts that are out there today, number 1, look at government I-bonds. Number 2, look at current money market rates that are out there. Number 3, look at traditional fixed annuity rates. And number 4 is if you're looking at what type of investment has historically performed well in an inflationary environment, it's energy and small cap and large cap value stocks. Mm-hmm. And you point out the market has created some good opportunities. We're going to talk on this topic. Actually, we're going to spend an hour and a half diving deep into this topic coming up at our economic summit. So we've got the retirement journey coming up. That's going to be held It's on February 28th. It starts at 6 p.m. It's at the Hilton Garden Inn. It's one of our most popular events. So if you want to learn about, the economy, the markets, the updates, if you like this topic, you want to know how to position yourself going through 2023, I'd encourage you to register to come out to this event. Again, February 28th. Also on the website, it's ARHQ.com. Just click on the events tab. We have a couple Turning 65 events. We also have a lunch and dinner, 5 threats and opportunities facing retirees. And then last call, so if you're listening to this coming Tuesday, starting at 6 p.m., January 24th, we've rented the Maumee Indoor Theater. And if we're talking about danger zones in the economy, I can't think of a better movie to play than Top Gun, the new Top Gun Maverick. Mm-hmm. Yeah, exactly. So we'll be really just a social, entertaining event at the Maumee Indoor Theater. Tickets are free. We'd love if you're a veteran, active duty, first responder, you're absolutely free. Also, if you're just a fan of the show, fan of the podcast or YouTube, we'd love to invite you out as our guest. We've rented out the entire place. We've got over 150 people coming out for movie night. That's this coming Tuesday. So if you want to just turn the news off and have a great date night or just come out for some fun, go online. Again, ARHQ.com. You can register for one of our upcoming updates and one of our fun social events that we have coming up.
Absolutely.
And again, that's right at the events tab at arhq.com. Just as there are winners and losers in, football games, for example, it's the same sort of thing when it comes to the market right now. With high interest rates and high inflation rates, the market itself is not necessarily going to be the winner, but there are other things out there that could really benefit you, those opportunities that the guys at America's Retirement Headquarters are so fond of talking about. So to see what could work best for you, schedule a time to speak with them, 419-794-3030, or online, America's Retirement Headquarters or arhq.com.